Oh, good evening, guys. Welcome to a market recap for Thursday 20th and Friday 21st. Um, Obviously I couldn't trade these days. I had an exam Thursday and I was out today. But I'm just gonna go over like the market, I guess, for the past 2 days. S&P and Nasdaq today and yesterday. Just talking through how my strategy would have played out and stuff. I'm quite tired. It's been a long day. It's currently 10:30. It's nearing my bedtime, so I'm gonna try and do this quite quickly. So I also haven't got my glasses or contacts in, so I can't see shit right now. So, well, I can, but it's a bit scuffed. So heading into yesterday, on the 4 hour, we were um, bullish because the breaker structure happened after this candle finished forming at whatever 3 plus at 7 p.m. Yeah. So we were bullish on the 4 hourly, which means our strategy is looking for 1 minute shorts and 5 minute longs, I believe. Yes. 1 minute shorts, 5 minute longs. So 4 hourly is bullish. What's our high time frame points of interest? Well, we've got. Oh my god, that's bad. Oh my god. Hourly lows there, hourly lows there, and hourly lows there. We'd seen a big extension, so we can draw our fib retracement from the low up to the high. This is not a high, remember. This is a Let's be a move up then a move down. So it'll be here. We've got this 50% mark. And these retracement levels, I guess, here. We can come down to, we've also got hourly imbalances within here. Within here as well, hourly imbalances. Hourly imbalance here as well. You get the picture. Imbalances galore. So, on the smaller time frames now, we want to see for our 1 minute shorts because our 4 hours bullish. We want to see on the higher time frames it come down to go higher. Now on the 1 minute, we use the 1 minute to get that move down before going higher. So we want to see low time frame highs get swept out first. That's what we're looking for. Get rid of those for now because those are hourly lows that have already been swept. So we've got 5 minute highs here, and up here, and up here, 15 minute highs up here that don't get hit. But so we had 5 minute pre-session highs marked out. I'm using the 1 minute here, remember? 1 minute shorts. So session open, we'd already come down and swept out this 1 hour point of interest, you can say. A session started, this 1 minute low and this imbalance. But did the 5 minute break structure coming out of there? It did. However, we're still looking for our 1 minute short first. We don't have our 1 minute short yet. So we come up, we sweep out these 5 minute highs. And we get a 1 minute break to the downside here. Now we're looking for our final confluence. We've got an imbalance in the form of this candle gap here. Nice little candle gap. We'll cover that soon. And equilibrium from the high to the low. We come in, we fill that imbalance in, the candle gap, we fill that in, and we get a reaction out of there. So we can short off that candle close. Our stops 3 ticks above the high. And we can just target really this imbalance that had already been hit on the 1 hour, bottom of it, that imbalance, whatever you want to target. That retracement area, again, that's 72.5%, I think that is 70.5%. So just target really any of them. Oh, sorry. That did in fact get hit. Those lows down there on the hourly. Um, that's it for the ES 1 minute trade, and then we'll cover this quickly. Yes, the 1 hour lows got swept, and the 5 minute broke structure, and it was looking probably quite bullish, to be honest. If we were watching this live, we had that 5 minute imbalance, and we disrespected it. So that would have been enough for me anyway to, even if I was on the 5 minute short off that, and catch more downward pressure probably. That's how yesterday would have played out. But if we were looking, following our strategy perfectly, we'd have that 1 minute trade down to the point of interest down here. We're looking for a 5 minute break out of that point of interest, which we get here. And then we're looking for our 5 minute confluences. We get a 5 minute imbalance, sorry. We come into that imbalance. Do we get 1 minute break out of there? No, we invalidate it. So that bins off that confluence because it's invalidated. We'd then probably move towards the order block. We come into that order block. Do we get 1 minute break out of it? Yes, we do. So we probably would have entered a trade there, following our strategy. Although it depends how we're looking at. That probably would have been our 5 minute trade because the 4 hour was still bullish, remember? So that would have been stopped out. But it really depends how we're seeing it live because this big 5 minute imbalance did in fact get invalidated straight away. And that kind of means that this buying pressure was disrespected, which probably would have been enough to flip our overall higher time frame bias, potentially, for Thursday. But either way, there's Thursday's ES price action. Would have caught a win on the 1 minute probably. Move over to NQ for Thursday. It's already 7 minutes. Oh my god. Similar kind of situation on the 4 hourly. We were still bullish. We did have this big 4 hour imbalance that we could probably target as our high time frame point of interest. And also just this range probably. Oh, sorry, wrong tool. Just this range coming into this equilibrium range, whatever we could be targeting there. Even if it's just this range as well. Well, we'd see that already get completely disrespected before market even opened, I think. Yeah, market opened here already. So, just delete. So overall, this is probably our high time frame point of interest to come down to here before looking for longs. So we'd want to see low time frame highs get swept out. I'll go on to the 1 minute here for some highs. We do this live. We like mark out every time frame highs, like 5. Our low time frame highs can be 1 minute to 15 minute really for our strategy, I think. So we do come and sweep out these 1 minute highs. We don't get a 1 minute break of structure until here. We had this imbalance. What else is there? Equilibrium, we've always got equilibrium, haven't we? From the low to the most recent low there. And you see the candle that breaks structure had already tapped equilibrium and it had already filled this imbalance. But we see we come right back in the imbalance one last time and we get a bearish candle close out of there. That will probably be enough to short stops again. 144, 164. And just target, jump on the 5 minute quickly. Those high time frame points of interest, we had that equilibrium on the fib level. Bosh, done very quick. this imbalance, whatever you want to target, really. Depends how we are when we're feeling live. Oh. And then, once our high time frame points of interest had been hit, we'd be looking for a 5-minute break of structure, which we get here. So there's our 5-minute break of structure. And then we've got imbalances here and imbalances here. We come in, we fill it. Oh. We don't quite get equilibrium, but once we come in, we're looking for that 1-minute break to enter, remember? So we come in, waiting for that 1-minute break to the upside to enter. Don't get it, don't get it. We do get it. So most likely, we would have hit a long position off of there. Our stops below this imbalance, and then just target anywhere on the way back up, like these highs up here, for example. But we would also been stopped out of there if we'd taken that trade. Because remember, our strategy, if the 4 hour is bullish going into market open, high time frame we're looking for longs. High time frame we are looking for those longs. And we use the 1 minute to get down to the high time frame liquidity sweep, really, to go higher. So we probably would have won the 1 minute trade, and whether we even took the second trade, who knows, because there's a lot of bearish pressure coming up from Thursday. That's Thursday's price action recap. It's time to go into today. Now, I haven't seen any of today's price action whatsoever yet. This is completely blind. So, going into session open on the S&P, the 4 hours bearish, we broke structure with this massive X to the downside. So, heading into session open, on the 1 minute, what we're looking for longs. Because if the overall bias is bearish, we want to go up to go lower first, quite simply. So we have that 4 hour imbalance. I guess we can draw retracement tool. There's the most recent low before market had opened, but we don't really want to do that on the hourly and normally do this. So we had the high to the low before market open. And that's quite a big range, whether we would have realized that's a bit far away. I always do this anyway, do the smaller range from the high to the low before session open, which is there. So on the 1 minute, we're looking for longs up to this level, really. Bear in mind, we're acting in this 1 hour imbalance anyway. So, and we'd already pushed up to equilibrium. So I guess today was looking pretty bearish anyway. And if we're looking for 1 minute longs, we might not get that. But what we're looking for 1 minute longs, we're looking for low time frame sweeps first. So low time frame lows getting taken out. Red lows here, but ultimately these are the low time frame lows that did get swept, but we would have marked out all these anyway. I'm waiting for just a 1 minute breakout of any of this to go long. So we sweep out these lows. We get a 1 minute break here. But we see we just sell off more, really, so we wouldn't have really caught a long there. We did have this candle gap, but just get closed below straight away. Similarly, order block just pushed right through. So we'd see these lows get swept, and we're looking for that 1 minute break. Most recent high, move up, then move down. Here we go. 1 minute break, along with the same candle invalidating that imbalance. So that really would have probably been enough just to long that for me. We can see 3. There we go. And then where are our targets? Really, this equilibrium range. Remember, our high time frame target. before we can go lower and fulfill our bias. So that's probably the trade we'd take. Yes, this hourly imbalance as well. There's our 1 minute long. That's against our high time frame bias. And then once that high time frame point of interest gets hit, what we're looking for, a 5 minute break of structure, because that's in line with our overall high time frame bias. So on the 5 minute, we're waiting for that break of structure. We come into this imbalance, we get a 5 minute break, move down, and then move. Is that a blue candle? That's a doji. Ignore it. Down, then and move up. We'll go there. So that candle does give us a break. And then we're looking for really anything else. Keep in mind this imbalance and still respecting it. We break 5 minute structure. We get an imbalance there on the 5 minute. Waiting for that 1 minute break out of it. We don't get one. We keep pushing up. We invalidate that imbalance. Cool. And then we break back to the upside again on the 5 minute. So we're looking for a break back down. We came back into this high time frame point of interest again. The imbalance. So waiting for that 5 minute break. There we go. And just looking at it, we can't really see we're getting much. With this big 5 minute imbalance, I'd say if this was invalidated, that would be enough as a confluence as a whole, because a 5 minute imbalance getting invalidated. So boom, stops above it. Target probably anywhere really. Liquidity there. That would be it really. Liquidity there, and then we target liquidity down there. That wouldn't get hit either. And it stops out. But overall, Friday today looked quite good. But it just depends. Obviously, it's easier to see and say and do all this when price has already made its move. And it's a lot harder in live, and I get that. But jumping on to NQ, similar situation. Don't really need to talk this through. We had this 4 hour imbalance, 4 hour equilibrium. Want to get hit to go lower. Hourly, pre-market, over the high to the low. We want to see these levels get hit before going lower and fulfilling our bias. So on the 1 minute, we're looking for longs, remember. And we get these lows getting swept out. So on the 1 minute, we're looking for longs. Waiting for that 1 minute break. Boom. There we go. We then invalidate this imbalance on the 1 minute with that candle. And we retrace back into this 1 minute imbalance here. We fill that nice and clean, get a bullish candle out of there. Boom. Stops anywhere. I'll probably put it below this imbalance or below this imbalance. It really just depends. About there. And we're targeting that high time frame point of interest, remember. So we had this equilibrium of the range here. Boom. Maybe these levels as well. So that's our 1 minute. That's our 1 minute trade. And then remember, after that high time frame point of interest gets hit, we're waiting for a 5 minute break of structure to the downside to fulfill the rest of our bias. So we get one here, but then we see similar situation. Invalidate that imbalance, go higher. 5 minute break. We get one there. And then we're acting within all these imbalances still. We invalidate both of them. There. And then we're just looking that 1 minute break again out of any of these. And then we go lower. So overall, Thursday, our high time frame bias was bullish, and that was wrong. But we would have still caught our 1 minute trades, our 1 minute shorts, because if the high time frame was bullish, which it was on Thursday, we have 1 minute shorts, and they would have won. And then our 5 minute longs would have lost because our bias flipped. But it just determines how we read that in a live market. And then on Friday, we our high time frame was bearish, so our 1 minute longs would have played out well, and our 5 minute shorts would have also played out. But it just, again, it depends how we read live markets and how long we're on the chart for, because sometimes the 1 minute setups appear in the first 10 minutes, sometimes the 1 minute setups appear in the first half an hour, and then it really begs to the question, as if I've waited half an hour for a 1 minute setup, do I then, after that 1 minute setup, want to take another 5 minute setup trade an hour, 2 hour, 3 hours into market open? It's just that question, and it all depends on live markets, which we will be able to trade on Monday. Heading into next week, Monday, no news. No news Monday will be quite slow until, I suppose, this is this. That's in the morning. That's way before market open. What time is that in New York time? That GMT -4, I think. That can't be right. Why is an FOMC member talking at 3 in the morning? That is quite the confusing. But anyway, Tuesday, we've got a red folder at 3 p.m, so that means we'd be waiting for that anyway. So no 1 minute trades before 3 p.m. anyway, waiting for that news to come out. Wednesday, nothing. Thursday, that's all pre-market. This half an hour into market open. Again, we'd be waiting for that. And Friday, into market open, we'll be waiting for that as well. So next week's looking good. Got some volatility coming into next week. I hope that video helped. It was quite long, 23 minutes on. Sorry for that. But I just wanted to do this for myself, really. This was a personal project. I wanted to recap the past few days, and I thought I may as well just record it and talk through it, because it helps me when I speak through it out loud, I guess. Because it really helps bring this shit to life, I guess, and like get it in my brain. So I hope this is going to help me in the long run. I hope this helped you as well. And I'll catch you in the next one.